Market volatility can oftentimes be very uncomfortable, but it's not unusual. In fact, it's a very normal part of the long-term investor experience. Since 1980, the S&P 500 has experienced intra-year drops on average of about 14%. However, in about 75% of those same years, the S&P 500 ended with a positive annual return. 2020 was a great example of this. During COVID, the S&P 500 dropped 35%. That was scary times. But throughout the year, it recovered and rebounded to be up 16% at the end of the year. Markets rebound for a number of reasons. Companies adapt, become more efficient, technology improves productivity. Sometimes one sector starts booming while another is struggling. Overall, the market always offers a positive expected return for investors. That means if bad news comes, the market prices may drop to a certain point that once again offers a positive expected return for investors to incentivize investment. That's the equilibrium where there are just as many buyers as there are sellers. The US has experienced a lot of difficult times since 1926, from the Great Depression to World War II, pandemics, and a number of different wars. Overall, the S&P has still been able to return 10% per year. So how do we develop portfolios to withstand these troubles? There are a few different strategies. First, we have to know clients' short, intermediate, and long-term needs. We then build portfolios with different asset classes that don't always move in the same direction. So when volatility comes and a client needs income, we pull from the asset class that it's held its value the best. That's oftentimes bonds, and let stocks recover. That's why your investment plan needs to be designed to handle storms and not just sunshine. At 3 Arch Wealth, we get to know your goals, priorities, and needs. We rebalance proactively. That oftentimes means buying low and selling high. We withdraw from stable assets to let equities recover, and we provide some emotional stability throughout the process. Like I said, market volatility can be scary, but it doesn't always have to be stressful for investors that are properly and well prepared. So if you're interested or worried about market volatility, feel free to reach out to us.